September 22, and also to address some of the issues which need to be looked at by the department, as well as to create an awareness about the changes in a little broader way. So in this occasion, I welcome each one of you once again, and the role of the Manorama in organizing a program in collaboration with the department is really commendable. In fact, it reinforces the commitment to the common cause as well as the cause of the society at large. So my appreciation to Manorama and their team for to be with us in this program, in organizing this program. Today, in fact, we are completing exactly 2 months since introduction of GST on September 22nd of 2025. We are on November 22nd. In the initial first 1 or 2 weeks, all of us were busy or engaged in understanding what was GST 2, what were changes, what happened. And subsequently, maybe for a period of months, all of us, including the taxpayers and tax professionals, were busy in complying with the new changes or availing the benefit of the new tax system that has been rolled out. So all of us had a first round of introduction to GST 2 by way of experiencing, implementing, executing, or availing the benefits. So I think this would be the appropriate time for us to revisit or have a sense of the experience of the industry as a department, and to see what are the areas which you need further hand-holding from us, as well as to guide you through the compliance process which is emerging from GST 2. I'm also happy to see that we have a participant in the students community also. They are all tax students or tax as part of the curriculum. By this time, most of us are generally aware about the GST changes that has been brought in, since we have been working, learning, understanding this thing for the last 2 months. But to set a tone of the discussion in the coming sessions, it would be better to have a broad idea of the changes, so that all of us will refresh our mind what exactly is GST 2 or what are the broad features of GST 2. To put in a very structured manner, I would say that rather I would like to touch upon 3 broad areas of the GST 2, area of this session. The first is about the GST 2, what are changes that has been brought out in GST 2. Secondly, while the GST 2 rolls out many benefits of tax reduction in different areas, it also brings out certain compliance requirements from the taxpayers. It triggers or it invites certain compliance requirements while you avail the benefits. I want to sensitize all of you, taxpayers and tax practitioners, about the compliance expectation from you in the new system, so that you don't end up with any later audit exposure or scrutiny issues at a later point of time. Thirdly, maybe I may look at 1 or 2 sectors objectively as to see how the sector feeling about the changes, and I would also love to see the all sectors to have a look at the new changes and have us feedback, which will enable the administration to fine-tune further. So broadly, I'll be touching upon the changes, compliance requirements, and some of the sector analysis. While you look at the changes, again, for the purpose of ease of understanding, we can broadly categorize into 4. One is the most common one, which all of you are aware, the rate changes or rate-related changes. The second one is the changes given to the taxpayers by way of change in law. Basically, a simplification in certain areas which the taxpayers were finding difficulty. The third is the simplification by way of procedures in certain areas, which was a need of the industry or which has been an aspiration of the industry in some of the sectors. And fourth is some of the changes by way of clarifications. So broadly, the changes will be in terms of rate changes, as you know, changes in law, changes in procedure, changes by way of clarification. But all of these are facilitative in nature. Nothing is bringing out any new complaints in respect of this category. So while we look at the change of rates, as the speaker has mentioned, initially, all of us know that GST has got a number of slabs, If you leave out the outlays like 3% for jewelry, 1%, 1.5% for diamonds and all, we have broadly 4 slabs, or we had 4 slabs: 5%, 12%, 18%, and 28% slabs. Of course, compensation, which I am not taking into factor in now, because most of the commodities would be falling under any of the 4 sectors, four slabs. The most important change what this list has made is the 12% slab has been abolished or done away with, except for one commodity. So practically, all the 4 main slabs has now come into 3 slabs. It has been a very structural reform in terms of the slabs. It's towards simplification. So while this has been abolished, there are 2 consequential changes, which is part of the reduction slab as well as part of the rate reduction as part of the government's initiative. The first change is moving a certain number of items from taxable to exempted category. I mean, bringing some of the goods from either from 5, 12, 18 or 28 to 0 rated. So this has been a very major initiative of the GST Council or the government as such in this decision. Most of you must have come across this product already, but if I mention in terms to be precise, if you look at from the 5% slab, there are 8 products that have been reduced to nil rate. Some of in food sector, some of health sector, some of the education sector. So 8 products have been removed from 5% to nil. And if you look at 12%, roughly around the 58 products have been moved from 12% to nil percentage. And then from 18 to nil percentage, 20 products have been moved. Some of them are communication equipments. So all put together, while we look at the numbers of exempted category from taxable, it stands at 66 items. 66 items have been brought from taxable to exempted category, which is a very significant milestone or a change by the government. The next most important radical change is there has been a slab climbing down. A number of products have been brought down from the higher slab to lower slab. If you look at items have been moved from 12% to 5% because 12 has been abolished. It has moved from 18 to 5%, then 28 to 18%. These are the broad changes, movement across slabs. If you look at the reduction from the 12%, 5%, that's a huge number. 255 items have been moved from 12% to 5% slab, ranging across different sectors: food, agriculture, fertilizer, health, textile, handicraft, wood industry, personal consumption, you name anything. Any item of very common use will find in the slab, which has been moved from 12 to 5%. While you move from 12 to 5%, it's not 7%, it's not only 7%. If you look at it in absolute terms, it constitutes roughly around 60% reduction in tax amount. Earlier, while we were paying at 12%, now it has become 5%. And covering around 250 products, have been very, very significant change. And when we look at the 18% to 5%, there are 58 items that have been moved from 18% slab to 5% slab, which also covering different sectors like health as well as food and agriculture. And the third major change is, most of you might be very well aware of it, moving of the goods from the 28% to 18%. The most common is automobile. As you know, the small cars have been brought from 28% to 18%. It has been a significant change. There are 28 items that have been moved from 28 to 18%. So while you add up this together, what has been exempted 66 items, and this is around 342 items. So roughly 400, to be precise, 408, rather let us say 400 items have been moved down either from a taxable to exempted or from a higher tax slab to lower tax slab. This is a very phenomenal change which has been given by the government to the industry as well as the consumers, which we never saw in the past. So this is a big opportunity for the industry to look at it or take benefit of it. Take benefit of it in the sense, it could be in multiple ways. You might be looking at only what happened to your product. But this is also an opportunity for a look of business perspective. What are the other products which slab has been brought down, tax has been brought to nil, or tax has been reduced? So that you can look at diversification of products or expanding the product portfolio, and finding in new markets, new consumer segments. Because by the rate reduction, a number of commodities become affordable to new consumer segments. Similarly, the consumer awareness has been created by the government in a very organic way, because most of the citizens of India are aware that rate has been reduced in GST. So it's a big opportunity to looking at around 410 commodities where the tax has been reduced significantly from the business point of view to boost your production, marketing capabilities, or finding new markets and expanding or boosting the growth, which will directly benefit the economy as well as the government too. So this is what I like to ask you to look into, the opportunities. So this is broadly about the rate changes. Of course, you know that commerce cess has been abolished. We had a number of slabs like 1%, 3%, 15%, 17%, 20%, 22% for different products, more also in automobile. All this has been done away except for the tobacco products. So no product has commerce cess. It is another major signification of the rate structure for the part of the government. So while this being the changes in the rate structure in a broad sector, there are two major changes by way of law to give a simplification to the taxpayer. The first is on the post-sale discount. Most of you must be aware that while you give a discount at the time of sale, there's no conditions. You can give it any number of discount. We will not be disputing it. But in a scenario when you give a discount after the sale, the post-sale discount, there's a condition under section 15(3)(b) which require that there should be a agreement in existence at the time of sale if you wanted to give a benefit at a later point of time. So extending the discounts after the sale was always linked to the existence of a pre-sale agreement regarding the discounts, maybe volume, quantity, whatever it be. But this has been restricting the maneuverability of the industry and the trade to work upon a feasible discounts. So government has recognized the need of such a giving a flexibility and come out with an amendment to section 15(3)(b) is proposed, so that the condition of having a pre-agreement to give a post-sale discount has been proposed to be discontinued or done away with. So you have given a larger legroom to move around or larger flexibility to manage with the discounts to make it more viable from business perspective. The only condition is that if you wanted to avail the GST benefit at the supplier side, you need to get the ITC reversed on the recipient side. It's quite logical, because unless you pay, the person cannot take ITC. So it has been simplified, give better leveraging, better management about the postal discounts. This is a major change in the law. The second change in law is about the intermediate services. Some of you might be aware, may not be all the people, because it has been a very peculiar to some of the service sector. For example, if I am explaining with a simple example, you must have seen a lot of these education consultants who are giving consultancy to the foreign institutions as well as students in India. They secure admission to the students in India in foreign universities, rather than mediate between the foreign university and Indian students. In the process, the Indian agent get a commission from the university for the admission that is securing. So it's like a part of the fees paid by the student. I mean, it is paid by the foreign university. He will be receiving foreign currency, and they are not related persons. So it has got all the, logically all the features of the exports. So you must be treated as an export. But because of a legal fiction, that such services are deemed to be supplied in India. Rather, the place of supply is deemed to be in India in case of intermediate services. So because of the deeming fiction or because of legal section under section 1385 GST Act, none of this, I am giving one class of example. There are similar, a number of people are there. This is a major class. These people who were asking us intermediary, mediating with a foreign client and Indian client and securing business, but earning in foreign exchange were denied. They were not entitled for the export benefit. Not only that they were not entitled to benefit, they were also ended up paying tax in India, though they were any foreign exchange. This has been a pain point for the industry who were operating as intermediaries, and has been a concern of the government also. So government has come up with a very rational or very reformative step to abolish the concept of intermediary place of supply provision. So henceforth, even if you are intermediary, as long as you bring in foreign exchange, as long as you provide supply to the foreign client, it will be deemed as export in any other case, and you will be entitled for all the benefits. You will get the export benefits, you will get ITC refunds, you need not pay the GST in India too. So this is a big relief to the industry who are working as intermediaries. So this will be boosting exports, boosting the sector too. So these two, the post-sale discounts amendment and intermediary amendment dispensation, are the two major simplification or relief to the taxpayers by way of the amendment in the Act. There are two more major procedure relaxation simplification by this GST2. One is on the registration side. As you may be aware, while the GST was rolled out in 2017, registration was very simple because it was a new tax law. Government did not want to bring in a lot of checks into it, so it was almost automatic. But over a period of time, there has been some sort of a misuse of registration process because being too simple. So there has been a revenue leakage happening it. So keeping a balancing requirements of that industry, the trade or requirement of the industry, as well as the revenue requirements, government has brought in certain checks and balances in the registration system. So now there are three checks and balances available. One is authentication by the Aadhaar authentication by the OTP. Second is the physical verification by the officer. And third is the biometric verification at the biometric center of the GST department. There are three layers of verification depending on the risk profile of the taxpayer. This is in existence. But again, for a simpler, smaller taxpayer, this has been causing a little inconvenience. So government has come out with a very reformative step in this council meeting. For a small taxpayers, it has been defined that small taxpayer means small taxpayers who is issuing B2B invoices with a taxable value of below 2.5 or up to 2.5 lakhs in a month will be given an automatic registration. So they need not undergo the regular procedure as long as they declare that my turnover of B2B sales, not B2C, B2B sales is having a tax liability of only 2.5 lakhs in a month. Then based on declaration, an automatic registration will be given in a period of 3 days from the date of application. And this is a very major relaxation for the small taxpayer to get the registration. And it is estimated that, a majority, maybe more than 90% of the new taxpayers will be falling under the category. So it has been a very, very major steps in relaxing the registration process. Another one is regarding the e-commerce operator. As you know, as per the GST law, if anybody wants to operate in any state, if you have a business place, you need to have a registration in all the states. So it needs a logistics cost. You need an office is required. But now there is a proposal that somebody is operating only on e-commerce platform or online platform. Instead of to avoid the cost of setting up office in multiple states, government proposed for a simplified registration process for a people operating online in multiple states. The details we are awaiting it. So, but this will be another major step forward to boosting the online sales and other businesses. So this is a simplification in terms of registration. The next registration by your procedure is in terms of the refunds. Refunds, the customs refunds you get for the export of goods, it's almost automatic. But ITC from the divisions or selected formations you need to obtain through filing the refund application, making it processed. So now an amendment has been brought into section 54.3 and so rule 92 to make 90% of the refunds automatic within 7 days of the acknowledgement of the refund application. So if you are a risk-free, department has a mechanism to assess the risk of the taxpayer. If you fall under the note with the low risk category, even for the zero-rated supply, when you avail ITC refunds on exports or on inverted duty structure, you will be given 90% of the refunds automatic route in 7 days of the acknowledgement date. This is another major simplification by way of the procedure. In terms of refunds, this will enhance exports because the cash flow will increase it. Earlier, it may take more than a month or 2 months to get the money. Now, this will be available within a couple of, maybe within a week's time. So, this is a major step, will enhance support the exporters too. Another thing regarding the minor exporters, there has been a limitation or bar in giving export refunds below 1,000 rupees. It is capped. So small exporters doing through courier exports or postal export were not getting the refunds. This has also been done away with. So all exporters will be getting refund irrespective of the money amount, whether 1,000 rupees or above. Even 50 rupees will be getting a refund. This also will be attempt to help the small exporters. So this is by way of circulars. So By way of law, we have the changes in the discounts and as well as intermediary. By our procedure, we have simplified registration as well as refund procedure. And there is one more initial change in by way of clarification. You might be knowing that, in restaurants, if you tell a little bit of history about the hotel and restaurant industry, earlier we had an issue of declared tariff which was done away in 2019 October. But in the last budget or last council meeting, just previous in 2025, a new concept was brought in that, the restaurants were not eligible for input tax credit. They were compelled to pay the 5%. But there was an option was given. Those restaurants who is having rooms with them, even if the room tariff is below 7,500, they do not fall in the ITC category. But there was an option was given to make a declaration and avail the benefit ITC and pay at 18% duty. But ultimately, when the scheme was rolled out, what was happening, this benefit was being availed by the standalone restaurants also. But the intention was not to extend this to standalone restaurant, but to restaurants clubbed with the hotel room accommodation. So it has been clarified that this facility of availing the ITC with 18% tax output will be limited only to the restaurants attached to a hotel rooms only. So this has been another way of a clarification. And on this sector, if you look at the sector, maybe I don't know whether anybody is from the hotel industry and this one. There is a little bit of a new scenarios emerging in this hotel industry where our room as well as restaurants clubbed, apart from what I have discussed is, earlier we were having 12%, for example, rather than 18% for all the 5-star, in the sense, who are having a tariff above 7,500. That remains to be intact. Anything below 7,500 having a 12% duty with ITC. So if you look at the hotels having 12 below 7,500, they had the facility of availing 12% rate with ITC. And these rooms are having ITC. Many people have also opted in to avail the restaurants also with ITC route. So both are operating under ITC facility with 18% for restaurant and 12% the rooms. But suddenly by this decision, the 12 has been brought down to 5% without ITC. So now they're left with only for restaurant for ITC. The industry need to have a look at it, whether the new scenario will be how they feel it, whether this system will be working well or not. You can revisit this industry and have a feedback to us. So broadly, these are the broad changes, rate changes, and reduction of the slabs. Cess has been abolished. Discount has been simplified. Refunds has been simplified. Intermediate has been taken out. Registration process has been simplified. These are broad changes in the GST2. And we have 2 more presentations. Basically, one is to sensitize you to avoid any scrutiny issues. What you should take care in your day-to-day activity. And also to help you to understand how the audit objections are arising, how you can avoid audit objections. My office will be presenting it. After we will have interactive session so that we will learn each other better when we interact each other. Thank you all.